Hello there. Welcome back to Introductory Accounting 84. In this video, we want to look at the preparation of the notes to the balance sheet, and also we are going to prepare the balance sheet. So the question that we have here is that the following trial balance appeared in the books of Siamo Gankulu on 30 July 2017. So on the required part, we are given that complete the trading account and profits and loss account in the general ledger of Siamo Gankulu for the year ending on 30 July 2017. And then second part, draw up the balance sheet for the year ended 10 July 2017. And 1.3, show the notes at the balance sheet. So as for this video, we're only going to look at 1.2 and 1.3. 1.1, we prepared it in the last videos, and we got 216,860 as our net profit. So we are just going to do 1.2 and 1.3. Remember, we are going to use this net profit figure in the notes to the balance sheet when we are calculating the closing capital figure on the note for capital. And so we will take this figure as 216,860 rands. Then we go to the notes. We are also going to go to do some pre-calculations in the form of our notes to the balance sheet, that of the figures that we are going to enter in the balance sheet. Remember, notes to the balance sheet, they come as pre-calculations that we do before we prepare the balance sheet. And the figures that we get there, we are going to transfer them to the balance sheet. So we are given a trial balance of Siamong and Kulu on 10 July 2016. So this is the trial balance that we are given. So you see that beneath this trial balance, we're given additional information in terms of our merchandise was valued at 82,500 after the physical stock taking on 10 July 2017. So we are going to start on the first note that we are going to prepare. That is the note for property, equipment, and vehicles. Property, equipment, and vehicles is the first note that we are going to prepare. So we are just going to list all the fixed assets or that current assets that we are given in the question, and then we calculate the total figure that we are going to use in the balance sheet. So let's just try to see the figures that we have there. So the fixed assets that we have in the question, we're going to find them under the balance sheet section. So we are going down, checking all the fixed assets. We've got one, land and buildings with an amount of 156,900. We have equipment with an amount of 168,000. We have vehicles again with an amount of 123,560. So those are the three fixed assets that we have that we are just going to list uh, in the other section for our property, equipment, and vehicles. So we are saying we are having land and buildings. So the figure for land and buildings, let's just try to see. Let's just try to. So the figure for land and buildings, we're going to put it in the first column that we have here. It is 156,900. And then after land and buildings, we have equipment with a value of 168,000. 168,000. Then after that, we have our vehicles with an amount of 123,560. And then these are all the fixed assets that we have in the question. Then we add them to get the total 120,560 plus 168,000 plus 156,900. We get the total of 148,460. So this is the total for our property, equipment, and vehicles. So this is the figure that is going to the balance sheet, and then we are just going to make a reference of note one. So we go to the next note that we are going to prepare according to this video. So the next note we are going to prepare for stock. So we're just going to say stock, and we check for the stocks that we have in the question, and then just list them there. So we are saying, if you come here, remember the stock, we get it in the additional information. The one that is given the trial balance indicates the opening stock. So this one is saying the merchandise was valued at 82,500 rands after a physical stock taking on 10 July 2017. So this is the figure for stock, trading stock at the end. In some questions, we are going to see that you behave with consumable stores as part of the closing stock. They are stationary as part of closing stock. If they are there, you are going to add them there to get the total for stock. So here we only have trading stock of 82,500. So we come here. So we are saying trading stock And then the amount that we have is 82,500. And that's the only stock that we have. So what we are going to do is we are going to just put it as the total of a stock because it's only one. So we're going to say 82,500. Yeah. That's the note number 2. So this is the figure that we're going to transfer to the balance sheet and we make reference of note 2. Remember, this is note 2. Then we go to 3. Note number 3 is on, let's just try to see. Note number 3 is trade and other receivables. Trade and other receivables. So trade and other receivables, we are going to put our debtors control as one of the trade receivables. And then all other receivables, we are going to pick prepayments of expenses and accrued income or income owing is also part of other receivables. So we're going to list them beneath here. Then the total will come in line with our title of trade and other receivables. So I will go to the question trying to find out about those elements. If you come here, you'll see that we have got debtors control, which is 11,000. And we check for other receivables that we are having in the question in terms of prepayments of expenses or accrued income. See that we've got nothing. So it means this is only trade and other receivable that is there of creditors control. So we are saying sorry, of debtors control. So we are saying debtors control. And then the figure that we have is 11,000. It is also going to come in line with trade and other receivables as our total. Then we go to the next note. We go to the next note. Right, on the next note is note number 4. We are going to put our cash and cash equivalents. Cash and cash equivalents. And the figure for cash and cash equivalents include the bank balance. If it has a debit balance, it falls under cash and cash equivalents. And then petty cash if it's there, and the cash float if it's there, we also include the other cash and cash equivalents to get the total for cash and cash equivalents. So if you come here, you'll see that the figure for bank is here, but it has a credit balance. When it has a credit balance, it means it's it's supposed to go under current liabilities. So we're not going to put it under cash and cash equivalents, but we've got petty cash 1,300 and cash float 700. So these are the two that we are going to put under cash and cash equivalents. So here we are saying petty cash and then we've got an amount of 1,300. And then we have also cash floats. And we've got an amount of 700. So we say 700 plus 1,300, then we get the total, which is supposed to be 2,000. So here we've got 2,000. So this is the figure again, which is going to go to the balance sheet under current assets as cash and cash equivalents, 2,000. Then we make a reference of note 4. So we go to the next note, which is now our note 5. Note 5, we are going to calculate our capital. Remember, when you're calculating capital, you're going to say opening capital, which is the balance at the beginning, plus the net profit, and then we less our drawings. So we are going to start with balance at the beginning. So here we are saying balance at the beginning. And we get that balance at the beginning here. Remember, given 201,000 is capital. So this is, and the balance at the beginning, the balance that will be given in the total balance is the balance at the beginning. We come here. We are saying 201,000. And then we are supposed to add net profit. So we can just say plus net profit. Remember the net profit figure, we said it was calculated in the first part of the question, which was done in the previous video. We can just refer back there. And we said when it was calculated, we got 216,860. So this is the figure for our net profit. So here we are saying 216,860. And then we less our drawings. We go again with the question to try to find out about the figure for drawings. So you'll see that the figure for drawings that we have is here, which is 35,900. So we're just going to subtract 35,900. So we are subtracting. You can put in brackets. Then you say 201,000 plus 206,860 minus 35,900. We are going to get your 381 for capital, which is the closing capital figure, 381,960. So this is the figure for capital that's supposed to go to the balance sheet, and then we are going to make reference of our note, which is note 5 here. So we go to the next note, which is note number 6, and we are going to prepare for trade and other payables. Trade and other payables. So for trade and other payables, the first item that you enter is the creditors control. And then after creditors control, you're going to enter other payables. So other payables that might be there, we might have accruals of expenses or owings of expenses. And then we might have prepayments or in advance of income. So if you go to the question and try to find out about those elements, let's just try to see. Obviously, we will start with the creditors control figure, which is here, which is 48,000. Then we look for prepayments of income and accruals of expenses. We see that in our balance sheet section, we don't have such, so we are only going to put our creditors control as our trade and other payables. So here we are going to say creditors control, and the figure that we have is 48,000. So we are giving 48,000. And obviously we have one item, so it's going to be going to be the total, which is representing trade and other payables, 48,000. So these are this marks the end of our notes. So it means that we are just going to transfer those figures as we prepare our balance sheet. So we come here. So let's just try to remove this. So this is going to be our balance sheet. And we are going to see that in our balance sheet, we are also going to have this the column for notes. So basically we are saying this one is the notes where we're going to write the notes that we are taking the figures from. So if you come here, it means we also have the column that we are going to have for notes. Right, and obviously our balance sheet are supposed to also have a heading. So let's try to see. So on the heading of our balance sheet, we are going to say balance sheet. We are going to say balance sheet. Balance sheet of Siyabonga Nkulu. Siyabonga Nkulu SX. Remember the year is ending on 30 July 2017. And we can now enter. Remember, we're going to start with our assets. We are going to start with our assets. So we're going to say assets. And then we are going to start with the non-current assets. Non-current assets are the fixed assets. And then according to our question, we did a note for property, equipment and vehicles. And we got an amount of, we can now just refer back those, we prepared that. was the first note here, property, plant and equipment, and we got 448,460 is the total. And we're going to make a reference of note one. That is where we're taking the information. So we come here. So we are saying note one. Information is coming from note one. And we are putting it in the last column, whereby we are saying the figure is 448,460. And we're going to see that we don't have financial fixed assets or financial non-current assets. So this one also is going to be the total for non-current assets. So it's going to come here in line with our non-current assets, and it's going to be 448,460. So this is how we are going to prepare it. Then we go to the next item, which is current assets. So we are now on current assets. And then other current assets, we can start by the figure for stock. We did make a note for that. We can go back and try to see the figure that we got for note for stock. We are seeing that note stock here is note 2. That's the reference. And the figure is 82,500 here. So we go back. So we are just making a reference that we are taking it from note 2. And the figure is, we are putting in the second column, which is the figure is 82,500. Then another current asset, we've got trade and other receivables. We did a note for that. Trade and other receivables. So we're going back to the question and trying to see what do we have in terms of trade and other receivables, which is here. We are having 11,000, which is trade and other receivables, and it's note number 3 as a reference. We go there. So we are saying it's note number 3, and the figure is 11,000. And then from there, we are going to have our cash and cash equivalents. Cash and cash equivalents, and we are going to look for the information again in our notes. We did calculate it, and we got our 2,000 is total, and our reference is not 4. So we have even not 4, and we are saying the total is 2,000. So we're going to put our 2,000. So this marks the end of our current assets. Now we can add to get the total for our current assets, whereby we are saying 2,000 plus 11,000 plus 82,500, and then the total that we are going to get there is 95,500. Right. So from there, we can now add our assets. Remember, to get our total assets, we're going to say our non-current assets plus our current assets, whereby we are saying 448,460 plus 95,500. Then you get your total, which is supposed to come here, which is 543,960. And this is going to be your total assets. So here we are saying total. So this is what we have. There are on the next part, we are now going to the second section, which is for equity and liability. So we are going to the equity and liability section. So we are saying equity and liabilities. So other equity and liabilities, we are going to start with owner's equity. Owner's equity. And on owner's equity, that's where we are going to have the figure for capital. This is owner's equity. And then we're going to have the figure for capital. We can go back again to try to see the figure for capital that we calculated. We see that capital, we got 381,960 here, and it was note number 5. Note number 5. So we go there. So we are saying note number 5, that's the reference, and the figure is 300. Let's try to see 381,960, and this is going to be the total for order circuit again. So it's going to come here again. So we are going to go to the next part, which is non-current liabilities. Non-current liabilities. So this is non-current liabilities. In non-current liabilities, we go to the trial balance to check for loan. Obviously, we are going to have a long-term loan being a non-current liability. So I will come here. We've got a loan from Absa Bank, 22%, which is interest for 65,000. So this is the loan, the non-current liability that we have in the question. So we're going to say loan. And this loan is for, let's try to see the description of the loan of the bank. It's Absa Bank. Absa Bank, 22%. So you're saying Absa, 22%. And the figure that we are having there is 65,000. So we're having 65,000. And this is again the total that is going to come as on non-current liabilities. We only have our loan, which is 65,000. And then we have current liabilities. So on current liabilities, we are going to list the current liabilities that we have in the question. Remember, we've got trade and other payables. Trade and other payables. So we go to the question and to the notes section and try to see what figure do we have for trade and other payables. We are here. We have 48,000 as the total. And then reference is note 6, which is the last note that we have. Then I will go there. Reference, we are saying note 6. And the figure that we are having is 47,000. So here we've got 47,000. So remember, we also have the issue of bank overdraft and the credit bank balance that we got there. So we are saying when the bank here is got a credit balance, like in this case, we call it a bank overdraft. So this one is a bank overdraft. So when it's a bank overdraft, we put it under current liabilities as bank overdraft. So we come here, and the figure that we are having is 49,000. So we come here, it falls under current liability. So we are saying bank overdraft, and we are saying the amount that we're having is 49,000. So to get now the total for current liabilities, we are going to say 47,000 plus 49,000, then we are going to get you 97,000. And then obviously we need to get the total for total equity and liabilities. So that's the figure that we want now to calculate. So the total for equity and liabilities is going to come here as our total. So equity and liabilities, we have the figures there that we're just supposed to add. Remember, we have the figure for owner's equity, which is here. Figure for owner's equity, we are having it there. And then we add figure for non-current liabilities here and the figure for current liabilities. So 381,960 plus 65,000 plus 97,000. Then we are going to get the second balancing figure, which is supposed to be 543,960. So you see that this is the second balancing figure, which should be the same to the first balancing figure, which we are also having here. So remember, at the balance sheet, our statement of financial position, we prepare it according to the accounting equation. We'll try to abide by the accounting equation when you prepare the balance sheet. And it says assets is equals to owner's equity plus liabilities. So this is exactly what we have done. So for assets, here assets, we have we get assets by saying non-current assets plus current assets. And then we get the second, the first balance figure, which means at this side, if you put a line here, this side should be equal to this side. So for owner's equity, we have it, and then for liabilities again, to get the figure for liability, we say non-current liabilities plus current liabilities. So if you add owner's equity plus liabilities, the total that you get should be the same with the total for assets. So this is exactly as we did in this balance sheet. Remember here to get this figure, 543,960 as the first balancing figure, we added our current assets here to our non-current assets. Then we got our first balancing figure, which is this one. And then on the lower part, we added our owner's equity and all the liabilities, which is our non-current liability and current liability. And then we get our total for the second balancing figure, which is 540,960. So this is what we have, guys, according to this video for the notes out of the balance sheet and the balance sheet. Let's subscribe and share. Let's share the link to all our colleagues who are doing introductory accounting info. Let's meet again in the next video as we prepare for exams. As for this video, I'm out.